The truth behind JP Morgan's attack on Bitcoin companies. Who's really behind this? A Felix Exposé. Bitcoin has survived wars, recessions, market crashes, FTX, China bans, and endless media attacks. But nothing shakes the crypto world more than when Wall Street giants suddenly decide to protect the public from Bitcoin. Because when the biggest banks in the world, the same institutions fined billions for fraud, manipulation, and insider trading, start warning you about risky Bitcoin companies, it should make you stop and ask, who's really behind this? Why now? And what are they trying to stop? Today, we break open the door that JP Morgan hoped would stay shut. This is the story the mainstream media will not tell you. This is the truth behind JP Morgan's latest attack on Bitcoin companies. And why the biggest force behind this crackdown isn't even JP Morgan at all. Part 1. The shift no one expected. For more than a decade, JP Morgan, led by Dimon, has publicly hated Bitcoin. He called it a fraud, a danger to the financial system, a waste of time, a tulip bubble. He even threatened to fire any JP Morgan employee trading Bitcoin. And yet, after all the insults, after all the fear-mongering, after all the public hatred, JP Morgan is now running a blockchain network used by over 300 institutions, filing multiple crypto-related patents, offering Bitcoin exposure to its wealthy clients, and becoming one of the largest buyers of Bitcoin ETF shares for its asset management arm. So why the sudden attack on Bitcoin companies? Why smear campaigns, sudden warnings, and pressure on payment processors and banks? It's simple. Bitcoin is no longer a toy, it's a threat. For decades, Wall Street lived in a world where they controlled every entry point to money. Bank accounts, loans, mortgages, investment products, international transfers. If you wanted to send $10,000 across borders, you had to beg a bank. If you wanted to store your wealth, you trusted a bank that loaned out your deposits. If you wanted financial freedom, you needed their approval. Then Bitcoin arrived, an asset outside their control, a payment system they can't shut down, and a store of value that doesn't need their permission. And in 2024 to 2025, something happened that terrified them. Bitcoin companies became too big, too popular, too powerful. This wasn't just retail speculation anymore. Bitcoin firms were onboarding. Sovereign wealth funds, family offices, pension funds, and Fortune 500 corporations. Suddenly, ordinary people were escaping the traditional banking system entirely. That's when JP Morgan struck. Part 2. The attack begins. The recent wave of scrutiny against Bitcoin companies didn't start randomly. It followed a predictable pattern. 1. Large banks quietly freeze accounts of Bitcoin-related businesses. Payment processors suddenly face compliance issues. Exchanges see delayed transfers. Bitcoin miners receive sudden risk assessments. No explanations, no transparency, just friction. 2. Media outlets begin pushing coordinated narratives. Headlines like, Bitcoin companies pose systemic risk. Crypto firms evade oversight. Banks warn of growing threat from digital asset companies. Whenever the press, banks, and regulators all say the same thing at the same time, it's not a coincidence. 3. JP Morgan analysts issue negative reports on Bitcoin firms. These reports often contain outdated information, cherry-picked data, or exaggerated risk claims, and yet they spread everywhere. Bloomberg, CNBC, Reuters, shaping the public narrative. 4. Pressure behind the scenes intensifies. Regulators suddenly become interested. Politicians start making speeches about consumer protection. New rules appear with vague wording. Rules that only seem to hurt Bitcoin companies, not the banks themselves. This is no accident. This is a strategy, and JP Morgan isn't acting alone, because now we get to the real truth. So part 3, who's really behind this? If you think JP Morgan woke up one morning and decided to save Americans from Bitcoin, think again. Here's the uncomfortable truth. JP Morgan isn't leading the attack. They're following orders. The real force behind the crackdown is a coalition of 1. Central banks who fear losing control over monetary policy. 2. Washington lawmakers who fear losing control over the financial surveillance system. 3. Global banking giants who fear losing trillions in a fee income. 4. Legacy payment networks who fear becoming irrelevant in a Bitcoin-based settlement world. This is not just an attack on Bitcoin companies. This is a defense of power. The central bank fear. Bitcoin exposes the weakness of central banks. They can print money. They can manipulate interest rates. They can inflate away savings. But they cannot control Bitcoin's supply, and they cannot track Bitcoin the way they track bank accounts. For central banks, Bitcoin is a mirror showing everything they don't want people to see. That's why they encourage banks like JP Morgan to pressure crypto companies. Because a world where people hold Bitcoin instead of fiat is a world where central banks lose control. On the government fear. Governments fear a financial system they cannot monitor. Today, they see more Bitcoin payrolls, more Bitcoin businesses, more Bitcoin remittances, more Bitcoin payment infrastructure, more people storing wealth in BTC instead of banks. This terrifies Washington because they can't freeze a Bitcoin wallet. They can't censor a Bitcoin transaction. They can't inflate away Bitcoin savings. They can't enact capital controls on BTC. They can't tax what they cannot track. So they lean on the banks, especially mega banks like JP Morgan, to slow Bitcoin adoption. Banks become the enforcement arm, regulators become the pressure, politicians become the voice, and the public never sees the puppet strings. Of the Wall Street fear. Wall Street fears losing custody revenue, management fees, wire transfer fees, FX fees, advisory fees, settlement fees, interbank loan interest. Bitcoin does all of this for almost free. And when Bitcoin companies rise, companies like miners, exchanges, payment processors, and custody firms, Wall Street loses the ability to extract profit from the money system. So they smear Bitcoin firms. They restrict Bitcoin firms. They attack Bitcoin firms. Not because Bitcoin is dangerous, but because Bitcoin is dangerous to them. In Part 4, Why Now? Why attack in 2024 to 2025? 2 reasons. 1. Bitcoin adoption is accelerating faster than the banking system can handle. Corporations are putting Bitcoin on their balance sheets. Countries are considering Bitcoin-backed bonds. Bitcoin ETFs are sucking capital out of traditional assets. And ordinary working people, fed up with inflation, are moving savings out of the banking system. The banks feel the bleeding. 2. 2025 is shaping up to be a year of financial turbulence. Debt is exploding. Interest rates remain high. Commercial real estate is collapsing. Banks are sitting on trillions in unrealized losses. Government deficits are out of control. In such a fragile system, the last thing the financial elite wants is a parallel financial system gaining more power. So they attack, not because Bitcoin companies are weak, but because they are strong. Part 5. The hypocrisy of JP Morgan. Here's the most shocking part. While JP Morgan attacks Bitcoin companies publicly, behind the scenes, they buy Bitcoin ETF shares, work with crypto custodians, build blockchain infrastructure, hire crypto specialists, file crypto patents, lobby for Bitcoin-friendly regulations, and prepare for a world where Bitcoin becomes a settlement asset. This is classic JP Morgan strategy: attack publicly, accumulate privately. Dimon has done this with tech stocks, housing markets, gold, and now Bitcoin. He talks down the market while quietly positioning his bank to dominate it. JP Morgan isn't trying to kill Bitcoin companies. They are trying to replace them. They want to weaken independent Bitcoin firms, so Wall Street can take over the sector later. This is how monopolies are built. The Part 6. The Endgame. Control. The ultimate goal is not to destroy Bitcoin. They know they can't. Bitcoin is decentralized. Bitcoin is global. Bitcoin is unstoppable. The real target is Bitcoin companies, the bridges that connect normal people to Bitcoin. If banks can control the companies, they can control the flow of fiat into crypto. They can limit who can buy Bitcoin. They can track every movement. They can force KYC on every transaction. They can tax everything. They can control Bitcoin without ever touching the Bitcoin protocol. This isn't a war against Bitcoin. This is a war for domination of the Bitcoin economy. Part 7. What they fear most. Despite all their power, there is one thing JP Morgan, the government, and central banks fear more than anything: a world where ordinary people become their own bank. No middlemen, no permission, no censorship, no inflation stealing your savings, no hidden fees, no banker telling you what you can or cannot do with your money. Bitcoin companies are building that world, and that's why they are under attack. Part 8. What happens next? The crackdown will get worse before it gets better. Expect more regulations targeting Bitcoin firms, more media attacks, more bank restrictions, more aggressive compliance demands, more political speeches, more pressure on miners, exchanges, and Bitcoin payment companies. But in the long term, this attack will backfire, because every time the old system tries to suppress Bitcoin, it only makes Bitcoin stronger. Every restriction pushes people deeper into self-custody. Every attack exposes the system's insecurity. Every smear campaign wakes up more people. And every attempt to control Bitcoin ends with the same result: Bitcoin wins. Not because it is perfect, but because the alternative is corrupt. Part 9. The final truth. JP Morgan's attack on Bitcoin companies is not about protecting consumers. It's about protecting power. And the real force behind the attack is not Jamie Dimon. It is an entire financial system terrified of losing its grip on money. They know the truth. Bitcoin represents freedom, transparency, fairness, sovereignty, and a future outside their control. And once people taste that freedom, they never go back. That is why they fight. That is who is really behind this. And that is why the battle for Bitcoin's future and your financial freedom is only just beginning. If you liked this content, don't forget to like and subscribe. Stay awake. Stay aware. This is Felix. See you next time.